Experts say bear markets bite could get worse. The Dow Jones at 6-year low, but some experts predict that more pain lies ahead. Yes, more pain. With the Dow Jones Industrial average plunging past its lowest point since the financial crisis began, many panicked investors are asking, how much uglier can it get? How much worse will it get? Many market economists and technicians, armed with reams of historical data, say that even though the Dow Jones has given back all its gains, and then some, from the 5-year bull market that ended in 2007, it is unlikely the market has hit bottom yet. Chief Technical Strategist at Standard & Poor's Equity Research has said the current market environment is showing few of the signs that have characterized previous lows: high price volatility, high volumes of trading, and even higher, yes, even higher levels of fear. Bear market bottoms tend to be violent affairs, he said. You sell hard, you rally hard, you go down hard, and then you're off to the races. And that's not what we're seeing right now. Until this week, the market was really drifting sideways. But once again, there's something bigger than all this going on in the world nowadays. There's something more going on, and everything is interconnected or connected. It is a worldwide economic crisis like never seen before, and it will never be seen again. Anyway, they say not enough fear, and for all the jitteriness out there, the options market, where investors trade contracts that bet on the future direction of the stock market, is not showing the fear that signals that true capitulation has arrived. Many market participants think capitulation, when investors take their losses and get out of the market altogether, must precede a major market recovery. We have not reached high enough levels of fear in the options market to suggest that this test of the lows is going to be successful. The Dow Jones Industrials, made up of 30 blue chip stocks, closed Friday at 7,365.67, down 6.2% for the week. And on Thursday, it fell below the previous bear market low, reached November 20th of last year, to hit its lowest level in 6 years. On Friday, it dropped even further as investors worried that the banks would be nationalized. The market recovered some of its losses after the Barack Obama administration said it preferred to keep major U.S. financial firms in private hands. Well, at least for now, so they say. Bank of America and Citigroup, which have each taken $45 billion in government funds, and which investors most fear may be subject to a government takeover or nationalization, are components of the Dow. They were down 32 and 44% for the week, respectively. The Standard & Poor's 500 stock index, a broader market measure, fell 6.9% for the week to close at 770.05. The technology-heavy NASDAQ Composite Index dropped 6.1% to 1,441.23. Investors are flocking to safer havens, including Treasury securities and gold. Prices on the benchmark 10-year Treasury note jumped, sending its yield down to 2.79% from 2.86% Thursday. Gold jumped above $1,000, settling at $1,001.80 an ounce on the New York Mercantile Exchange. Friday's drop in stocks came as the government announced that consumer prices rose 0.3% in January when compared with the prior month. Prices remained flat when compared with the same period 1 year ago. The first instance or time since 1955 in which U.S. prices have not increased on a yearly basis. And with more grim economic news expected in the weeks and months ahead, among other things, investors are waiting for more clarity on a bank rescue plan from the government. But then again, can the government do everything? And like I say once again, everything is connected or interconnected. Everything going on around the world nowadays is connected with the things that are going on here with the economies of the world. Everything that can change must change rapidly. Trading in general has been pretty thin, said Bart Barnett, head of equity trading at Morgan Keegan. There are a lot of nervous folks out there waiting to see how low this market can go. When people aren't convinced one way or the other, markets just drift down. Mass psychology of fear, or the fear factor. Then asked if the new low for the Dow Jones could be a market bottom, Barnett said, well, there's an old saying, today's lows will be tomorrow's highs. Again, he said, today's lows will be tomorrow's highs. That's probably very well true. Yes. And once again, all these things are connected in turn with the end times, transition days. There is an ongoing transition. All things must change rapidly. And once again, all these are